Have you ever wondered why big shot investors seem to print money in the crypto market while everyone else is riding a painful roller coaster? Over the past decade, digital currencies have exploded from a niche experiment into one of the most powerful wealth creation machines in modern history. What many once called a bubble is now attracting hedge funds, billionaires, and the world's smartest financial minds. And here's the secret. They aren't just getting lucky. While the average person gets tangled in hype and fear, these giants are quietly stacking up massive profits. How? Through strategy, structure, and ironclad discipline. They see a completely different game, and today we're going to pull back the curtain and show you exactly how they play it. First things first, major investors don't treat crypto like a lottery ticket. They see it as a legitimate new asset class, one with unique powers. It's scarce, it's decentralized, it has global reach, and it's a shield against the slow-burning fire of inflation. Think about Bitcoin. It's often called digital gold, not because it acts like gold every single day, but because it offers long-term protection. Institutional players know a fundamental truth. The cash in your bank account loses a little bit of its buying power every single year. By putting a slice of their portfolios into assets like Bitcoin, they're not just gambling. They're hedging against the entire financial system while setting themselves up for potentially massive growth. For them, crypto isn't a get-rich-quick scheme. It's a long-term strategic move. So, how do they actually buy it? This is where their strategy completely flips the script on what most people do. One of the biggest mistakes retail investors make is trying to time the market, buying low and selling high with perfect precision. It's nearly impossible. Large investors do the exact opposite. They systematically accumulate assets when everyone else is panicking, when the market is crashing, when the news is all doom and gloom, and when your friends are saying crypto is dead. That's when institutions are quietly buying. They love fear because volatility creates opportunity. Instead of reacting with their gut, they stick to their long-term plans. They've studied the history, and they know that crypto markets move in predictable cycles. For them, patience isn't just a virtue. It's one of the most profitable tools they have. Another key difference is what they invest in. Big investors don't chase after the latest meme coin that's trending on social media. They hunt for projects with real, tangible value. They're looking for the foundational technologies that will power the future. Think of platforms for decentralized finance, or DeFi, smart contracts that automate agreements, projects that turn real-world assets into digital tokens, and the core infrastructure that makes the entire blockchain world run. They get in early, often before the project is even known to the public. Venture capital firms and crypto funds invest in private sales, getting tokens at a tiny fraction of what they'll later cost on the open market. By the time you hear about a revolutionary new project, they've likely been holding their positions for months, or Ivan Ye's ready to reap the rewards of their foresight. And while Bitcoin is the king, smart money doesn't put all its eggs in one basket. They diversify. Think of the crypto world like a layered cake. At the bottom, you have the main protocols, like Bitcoin, and on top you have scaling solutions that make everything faster. Then you have the decentralized applications, or the apps, that people actually use, and they even invest in the stocks of crypto-related companies. This layer diversification is a powerful shield. If one part of the market takes a hit, gains in another can balance it out. This structured approach is a huge reason why professional investors can stay profitable, even when the market feels like it's in complete chaos. They're not just betting on one coin. They're betting on the entire technological revolution. Perhaps the most important strategy of all is understanding market cycles. Crypto markets breathe in and out in massive waves of euphoria and despair. Major investors know this rhythm by heart. They use the bear markets to long, cold crypto winters to accumulate assets at a discount. They patiently hold during the boring sideways phases. And then, when the market goes into a frenzy, when everyone is euphoric and headlines are screaming about new all-time highs, they begin to slowly and strategically sell. This is the complete opposite of the average investor, who often hears about crypto for the first time during a bull run and jumps in at the peak, driven by a fear of missing out. This is why wealth so often flows from the hands of the impatient to the accounts of the disciplined. When the party is at its loudest, the smart money is already quietly heading for the exit. And contrary to the image of the reckless crypto Dagon, major investors are obsessed with managing risk. They never, ever invest money they can't afford to lose. They use careful position sizing, meaning they don't go all in on a single trade. They rebalance their portfolios to lock in profits and manage their exposure. Some even use sophisticated tools like derivatives and hedging strategies to protect their capital when the market gets shaky. For them, protecting the money they have is just as important as making more. Finally, let's talk about their biggest unfair advantage: information and access. Large investors have better data, faster trading systems, and secure, professional-grade storage for their assets. More importantly, they have direct lines to the founders and developers building these projects. This information edge lets them see around corners and anticipate market moves before they happen. In a market that moves at the speed of light, being early is often more valuable than being right. So what does all of this mean? Digital currencies aren't just a fleeting trend. They represent a fundamental shift in how we think about money, value, and ownership. The internet reshaped information and commerce. Blockchain is set to reshape finance. The big investors know this. They're not just chasing quick profits. They're placing their bets on the right side of financial history. The massive fortunes being made in crypto aren't just dumb luck. They are the result of a long-term vision, a clear strategy for accumulation, disciplined risk management, and a deep understanding of how markets really work. For anyone willing to adopt that same long-term mindset, to control their emotions, and to learn from the pros, the world of digital currencies still offers one of the most incredible opportunities of our lifetime. The real question is whether crypto will keep creating wealth it is. Who will be prepared to capture it? Thanks so much for watching. If you got some value from this video, make sure to hit that like button and subscribe for more deep dives into the world of finance and crypto. See you in the next one.